Hello everyone, it's Red with RedDragonLeo.com and it is August the 20th. Sorry it's taken me a while to do a update for you guys. I've been really busy with some other stuff. And hopefully you were doing okay without me. I take a look at the charts right here real quick. You know, a week before last I said that we were going to go down here and fill this gap at 1650 area. We're going to go down to 1650, which is 165.09 on the SPY, and sure enough we've done that. However, last week, as you know, I was getting bullish. I was getting the strong indication that this trend line was going to hold and that we were going to turn back up and rally first and take out the 1709 high, or 171 here. And then maybe put in a little higher high, I don't know, 1720 or whatever, then come back down. And that never happened. It did break down as I originally thought, but so I missed that call. I got it right the first time, and then I missed it the second time. So hopefully everyone was able to catch that and profit accordingly. So what are we looking at right now? Is now this gap is filled. What I believe we have is some type of wave one down, crazy choppy wave two. Then you had a wave three, and now that's the completion of the wave three. The bottom of the wave three is possibly today, and then I think we could go back up for a wave four, and maybe we could hit either gap window here at 167.50, which is about 1675. If the bulls are lucky, then maybe we would go up here and do a gap fill there. But I don't get the feeling that that's going to be the case, that we're not going to. I just really doubt that that's what's going to happen. And so I would be leaning more towards gap window right here. But we just don't know with Bernanke and what he could say and what he could do to cause the market to run up. But I am looking for a move back up and then a final fifth wave. So if we look at this on Ron Walker's charts, what you're going to see right here is basically this very, very, very important channel that he's drawn. In this channel, this is on the daily chart. In this channel, you can see that we clearly broke through the green 1657 50-day moving average, and now we're kind of curling back up. You can bet that wherever these lines meet, if it goes back up there and hits them, you can bet that will be resistance for the 10 and 20 period moving averages. And that just coincidentally happens to be right around where that gap window is. Again, that's around 1675, I guess, is about where that's at. And looking at it on another chart, it looks like, yeah, 1673 and 58 cents, I believe. So what we're looking at here is most likely we'll get some type of bounce from Bernanke, and then it won't last, and we'll make a wave 4 up, and we'll come back down and make a wave 5 down, and we'll hit this trend line. And that's where I think the bottom's going to be. But I don't think that's going to happen until probably the end of the month. So considering today is the 20th, if we let's see, tomorrow's 21st, we start to rally a little bit on 21st, 22nd, 23rd, then Monday of next week, maybe possibly finish the rally and then curl back down a little bit. But by the end of the month, this whole move should be completed. Should have CL 5 waves, and we should see that lower high. Or lower low here on the market, which should, if all goes well, hit this trend line. And then once it hits that trend line, then we're going to rally back up, and that's the point that I think is probably the one that we really want to focus on instead of these shorter term moves. At this point, okay, let's see, there's a gap fill right there at 163, 1630. So that could be a possible target. But let's look at his chart, because it's got more room out here on the side here, and I'm going to draw on him. so that we can kind of get you an idea as to, let's see, okay, where are we at? All right, so assuming that Bernanke spikes a little bit in the market, and we get up here possibly at the highest to this 1675, I just don't see a lot more than that for a wave 4. And it could be choppy. This is not exactly drawn. And then we should come back over, come back down for a wave 5. Now you'll notice that also is a line of resistance right there. And then once we hit this, I'm guessing it's about the end of August, so by the 30th. Of course, the 30th probably isn't even an open date to trade with, but you get the idea. By the end of the month, we should do that. And then you complete one wave, 2 wave, 3 waves, 4 waves, 5 waves. 5 waves. At that point, I think we'll rally, bust out of this, that low, and then we'll go up here and we'll put in one final high. And I'm really just guessing on the top on how high it's going to go. If we draw a line, if we draw a line from this high to this high, I get the feeling that that's where it's going to go. So where's that going to be? 1730, 1740, somewhere in that range. Depends on where it hits it, when it hits it. That's the most important thing, where it hits it and when it hits it. So if that happens at that point, this line is going to run up, and then we're going to roll back over. We're going to hit this line, and once we bust through this line, I think it's all over. I think this is our crash. Yeah, we might get a bounce there, but I don't know. You know, when it crashes, it's just absolutely crazy. But where does that put us? As you can see, that puts us early October. Early October, not later October. And so the October 8th through 17th is Legatus. And Legatus. So you have to sit down there and think about when it's going to happen. It's going to happen before or afterwards. I tend to think it's going to happen before, based upon how this chart should play out in the time frame on it. I get the idea that sometime before October 8th, we should start this move down, because I think we're going to top right before Legatus this time. It's been going on for a long time, as you know, and I actually did a post on Red Dragon Leo and looked back at all the Legatus meetings that I could find, and if I recall, there was about a 70% accuracy rate on turns in the market. They weren't always crashes, but they were turns. I mean, look here at 1687. As you know, that was May 22nd, and you know, I called that one months in advance. And I called that because that happened to be a double 11. When you add up all the digits, it equals a double 11 for numerology, and Gary the Numbers Guy can tell you more on that. But I really didn't focus so much on that as I did the fact that the meeting was the 23rd, I think, at that time, to the 26th. So I had a feeling that I was looking for an 11 date around that period, and that was a double 11. It stood out like a sore thumb, and so that was the date that I picked months and months in advance, and we got it, and it was right. So and you can see it did the same kind of thing there. It kind of went down for some type of wave 1, maybe a 2, a 3, and then some type of ABC 4 wave. So it's kind of choppy. Then a final 5th wave. The 5th wave was actually the ugliest wave. I don't think it's going to be the case in this one, though. I think the 5th wave is going to be a little shorter, because it's got to stay in this. It's got to stay in this channel. It's got to stay in this channel. So, but if you go back and look at the past history of Legatus, you'll find lots of important turns were around that date. So we're going to look for a date prior to that. We can look for an 11 date. I looked at the 11 dates for the month, and at least the yearly ones where all the digits add up to make an 11. And we have the 4th, which is a Friday, We have the 13th, which is a Sunday, so that's out. And then we have the 22nd, which I think is it's a Tuesday. And that's after Legatus. So it all really depends upon when we hit this trend line. I'm really going to be focused on this trend line whenever it gets close to that date and it gets to be early October and we have rallied from here and we hit this trend line. I think that's it. So wherever that's going to be, 1720, 1730, obviously going to be higher than 1720. 1730, 1740, I don't know. Wherever it's going to be, it could be, I guess if they stretched it out long enough, it could be 1780 even, or maybe even 1800. I don't feel it's going to be there, but so it would put the Dow anywhere between, on the low side, 16,000 up to 17,000. So it just really depends on how far they drag it out. If we were to focus on the double 11 date here of the 22nd, if it were to stretch out that long and go after Legatus, then we could be getting up there to that higher range of the higher range closer to the 17,000. If it doesn't, and it does it early, like on the 4th, obviously Sunday's out, then we're going to be just above the 16,000 on the Dow. So that kind of gives you an idea. I don't see any ritual dates inside of the meeting from the 8th to the 17th. There's obviously the 11th is the 11th actually adds up. It's only a daily 11. So you have daily 11s that month, which are the 11th, the 22nd, and the 29th, where they add up to dailies. The 22nd happens to also be a yearly one as well as daily. So, but I really am not focused on the dailies. I don't think they'll do it that day. I don't think they'll do it that day, and I think this is too far afterwards based upon the charts again. So it's based upon this trend line. This is critical. When we hit this trend line early October, that's when the final high, I think, will be wherever it's at. I don't know. Definitely should be a higher high. Then you can go back and you can call it 3 peaks and you're doomed. You know, people talk about that as well. 3 peaks in a doomed market. So that will be your third major peak there. And I think that's what we're looking for. So this week I'm really not looking for a whole lot of much. Just choppiness, a little bit of rally off Bernanke, maybe to make a way forward, back down the rest of the week. We're going to chop it up until this thing actually gets itself some positive divergence and actually goes much higher. You can see down here, you can see how low we are on the daily chart. See, it's getting ready to curl up. That should tell you right there we're getting ready to curl up. Now, where should that go? Probably up here to hit this 50 line. Curl up and go hit the 50 line, then go back down and put in a higher low as the market actually goes lower, and then we rally. So that's kind of what I would expect there. And I must have hit the button. Sorry. So anyway, that's what we're looking at pretty much. And some of them don't have these positive divergence. You can see some of them just go straight up, don't have any divergence at all. Like this one here. It really didn't have a divergence. That one's actually a lower tower than that one there. But it did go up just above the 50. You know, actually it hit there, went back down, and hit there, then it finally rallied, as you can see. It's kind of the same scenario. Again, that's why I say that's what we'll do. As far as the market here, short term, well, again, we're looking at the SPY, but in short term, we appear to have closed this gap, and again, should go up here, at least hit this, possibly hit this trend line here, starting from 8/30/2012. Maybe that's our resistance point. If it merges with this one here, that's a necktie of resistance, so that could stop it, but it's liable to hit it over the next day or two, so that's probably too far out. So anyway, guys, I'm out of time. Thanks a lot for being patient with me, and I'll see you on the vlog. Good luck, everyone.